Bitcoin has slipped below its all-time high, trading around $103.00 after a 3% drop in the last 24 hours. The fall comes as Fed policy signals grow murkier. Odds of a December rate cut have fallen to under 70%, eroding the bullish backdrop that usually lifts crypto. Market mood is cautious. FUD lingers over potential tightening while FOMO remains muted, with traders eyeing a possible sideways consolidation rather than an immediate rally. Historically, November has been a strong month for Bitcoin, but current macroeconomic uncertainty and a lingering October crash are tempering long-term confidence. Analysts are split. Some point to historic bottom of cycle levels that could spark a rebound, while others warn that the pullback may persist until clearer signals emerge from monetary policy and broader economic data. Coinbase has pulled out of a nearly $2 billion bid to acquire London-based stablecoin infrastructure firm BVNK, ending what could have been the largest deal focused on dollar-linked tokens. The exchange and BVNK had entered an exclusivity window in October and completed due diligence, but both sides agreed not to proceed, leaving the transaction dead. Market chatter skews bearish for the broader stablecoin sector, as the collapse signals possible valuation softness and heightened scrutiny of large acquisitions amid regulatory pressure. For listeners, this move removes a key uncertainty from Coinbase's short-term strategy, while BVNK remains well-funded and open to new suitors. Meanwhile, the exchange may pivot towards smaller deals or partnerships to bolster its payments and stablecoin offerings. Tron TRX is currently under scrutiny as traders eye two key liquidation clusters that could shape its next move. Market data shows concentration of sell orders around the $0.0303 and $0.0328 price levels, suggesting these zones may act as support or resistance depending on how quickly the network can absorb or push through them. The presence of these liquidity pockets indicates a potential for short-term volatility. If sellers dominate, TRX could dip below $0.30 before finding new buyers. Conversely, if buying pressure mounts, the clusters might turn into bullish turning points, nudging the price toward the upper cluster and beyond. For investors monitoring Tron's trajectory, these levels are critical checkpoints. A breach of either could trigger broader market sentiment shifts, sparking FOMO among holders or fueling a cautious stance from risk-averse participants. Bitcoin slipped to $103,220 after failing to hold the $105.00 support level, sending the broader market cap tumbling by more than $100 billion to $342 trillion. Altcoins followed suit. Internet Computer fell 10.8% to $6.10, but remains above its key $5.94 support. The drop reflects a sharp bearish swing as global financial markets tighten and investor sentiment weakens, with the crypto market eyeing a potential retreat toward the $331 trillion floor if selling pressure continues. Meanwhile, regulatory headlines add to the FUD. Argentina's Libra probe targets President Milei's linked venture, while China accuses the U.S. of covertly seizing Bitcoin from a past hack, claims denied by U.S. authorities. Together, these events paint a cautious landscape for traders, underscoring the need to watch key resistance and support levels as sentiment pivots between fear and tentative optimism. Dubai's Web3 Expo 2026 is slated for January 14-15 at the Dubai Festival Arena, drawing a crowd of more than 15,000 attendees and showcasing over 300 projects across gaming, trading, and hackathon tracks. The event will award a total of $230 in cash prizes, a sizable incentive that signals strong industry backing and competitive momentum. Market chatter is leaning bullish, with FOMO driving interest among developers and investors eager to capitalize on the expo's visibility. For listeners, this highlights how large-scale conferences continue to act as catalysts for ecosystem growth, offering both exposure and tangible rewards that can accelerate project development and attract new capital into the broader Web3 landscape. Bitcoin ETF flows are heating up again as two of Wall Street's biggest names, BlackRock and Fidelity, lead a surge that brought in $524 million last week. The inflow reflects growing institutional appetite for regulated Bitcoin exposure, suggesting a shift toward mainstream acceptance. Market chatter is decidedly bullish. Traders see the capital influx as a stabilizing force that could dampen volatility, while some FOMO-driven participants are eyeing new entry points. This trend follows a broader pattern of ETFs gaining traction after regulatory clarity improves and more custodial infrastructure solidifies. For listeners, it signals that Bitcoin's path to mainstream finance is gaining momentum, with major asset managers now actively deploying capital into the crypto space, potentially smoothing price swings in the near term. Polymarket and fantasy sports app PrizePicks have teamed up to bring event-based prediction contracts into the U.S. market. The deal lets PrizePicks users buy Polymarket's entertainment and cultural moment wagers, expanding both brands' reach as Polymarket prepares to relaunch stateside later this month. With PrizePicks already a futures commission merchant under the NFA, and Polymarket securing a licensed derivatives exchange through QCX, the partnership signals a cautious but compliant push into a rapidly growing prediction market niche that dovetails with the multi-billion-dollar sports betting ecosystem. Industry observers see this as bullish for the segment, sparking FOMO among competitors like DraftKings, while reassuring regulators that fair play and transparency are front of mind. The move positions both companies to capture new user bases in newly available states, potentially accelerating adoption of regulated prediction markets across America. Sonic Labs has entered a new chapter under CEO Michael Demeter, who unveiled a long-term roadmap aimed at redefining how its Layer 1 blockchain generates and preserves value. The announcement signals a pivot toward sustainable growth, with an emphasis on real-world utility rather than speculative hype. Market reaction has been cautiously optimistic. Traders note the shift as a potential stabilizing factor amid broader Layer 1 volatility, but some remain wary of execution risk. For listeners tracking the crypto landscape, this move positions Sonic Labs to compete in a crowded space by targeting tangible use cases, an approach that could dampen FOMO-driven price swings if the roadmap materializes. Bitcoin has bounced back from the $100K floor to roughly $106K, signaling a release of selling pressure that followed October's sharp decline. On-chain metrics show a rebound in transfer volume and fees, while the RSI climbs above 30, hinting that aggressive short-term selling is cooling. Spot trading remains robust near recent highs, suggesting sustained participation. If Bitcoin can break through $111, $116K resistance, volatility could widen. Derivative open interest has trimmed modestly, reflecting lower leverage, and options skew stays defensive as traders hedge downside risk. Stablecoin reserves have risen relative to BTC's market cap, pushing the stablecoin supply ratio into a historic low that historically precedes rallies. These signals point to a cautious but stabilizing environment. Bitcoin is testing a mid-term support band between $100K and $108K, with accumulation likely to intensify if short-term sellers exhaust themselves. For listeners, this means the market remains poised, bearish sentiment easing, but not yet fully bullish, while macro conditions stay prudent, making patience key as the asset navigates its next cycle. Ethereum has slipped back into a bearish rhythm after failing to hold above $3,650, trimming recent gains and testing lower support levels. The crypto's price fell below the $3,550 resistance and the 100-hour moving average, breaking a bullish trend line that once anchored it at $3,575. With momentum now shifting into the bearish zone on the MACD and an RSI under 50, Traders are watching the critical $3,360 support. A breach could push the token toward $3,290 or even $3,220. Meanwhile, any rebound above $3,550 would face resistance near $3,650, with further upside potentially targeting $3,800, $3,880. The market sentiment is decidedly cautious, as fear of a deeper pullback outweighs optimism for a quick rally. For listeners, the takeaway is that Ethereum's current trajectory signals a testing of lower support and a need to monitor key resistance levels before any significant recovery can materialize. Ripple's XRP is eyeing a breakout near $270 as regulatory clarity and institutional demand tighten. The token sits just below a key resistance that analysts say could lift it into the $3.0, $3.30 range if call option activity continues to climb, hinting at bullish momentum after recent ETF speculation. Meanwhile, Bittencer's Tau is gaining traction with its new staked ETP listing on Switzerland's SIX exchange, offering a regulated gateway that may attract institutional capital and support the upcoming halving event. In contrast, Blockdag has already built a sizable user base, over 3.5 million active miners through its Zone mobile app, demonstrating real adoption before even launching its mainnet. Together, these stories illustrate a shift from hype to tangible participation. XRP's potential price move hinges on institutional inflows and payment use cases. Tau rides supply dynamics and regulated access, while Blockdag showcases how pre-built networks can generate momentum that may influence market sentiment moving forward. Uniswap's native token UNI has surged roughly 40% after the protocol unveiled its latest buyback initiative. The announcement revealed that UNI holdings have accumulated over 950 million tokens throughout the year, a figure that underscores the platform's growing commitment to strengthening its treasury and supporting long-term value creation. Market participants are reacting with bullish sentiment, as the buyback plan signals confidence in UNI's future prospects and may dampen short-term supply pressure. For traders and holders alike, this move injects renewed FOMO into the liquidity pool, potentially lifting trading volumes and reinforcing Uniswap's position as a leading decentralized exchange amid heightened competition. The broader crypto landscape watches closely, noting how institutional backing and tokenomics adjustments can sway market dynamics in real time. Bitwise has officially entered the spot ETF arena with its new Chainlink product, now listed on the DTCC under ticker CLNK, signaling a broader acceptance of crypto-backed securities by traditional market infrastructure. The listing follows the filing of an 8A form for a spot XRP ETF by Canary Capital, which is poised to launch later this week. Together, these moves underscore a growing institutional appetite for tokenized assets and could lift liquidity across the crypto equity space. Traders are watching closely. The CLNK debut may spark bullish sentiment among Chainlink holders eager for regulated exposure, while the impending XRP product adds another layer of competition that could pressure price dynamics. For listeners, this development marks a tangible step toward mainstream integration of decentralized tokens into conventional investment vehicles, potentially reshaping how both retail and institutional players navigate the evolving digital asset landscape. Wintermute's latest market rotation report points to Bitcoin as the front runner in today's crypto cycle. The research team flags a lack of short-term upside for altcoins, citing current macro conditions that favor the blue-chip asset over riskier tokens. As a result, sentiment across major exchanges is leaning bullish on BTC, while altcoins see a muted response, sparking a subtle FOMO wave among traders eyeing potential pullbacks. For listeners, this means Bitcoin's momentum could outpace the broader market for weeks ahead, with altcoin rotation likely delayed until clearer macro catalysts emerge. The report urges caution for those chasing short-term alt-season pumps, highlighting that BTC stability may be a safer play in the current environment. Bitcoin has stalled at a pivotal resistance corridor around $107, $108, after an aggressive push that ended in rejection, and a retreat to the $105 support level. The rally's failure suggests sellers have entrenched themselves near the ceiling, while buyers are still clawing back toward the upper band. If the price can reclaim the $107,000, $108,000 zone, bullish momentum could resume, potentially propelling BTC toward the next high corridor of $116, $118. Conversely, a break below $105 would expose a deeper pullback to the $103 support, tightening bearish pressure. Traders are watching these levels closely. The market's short-term direction hinges on whether bulls can overcome the current barrier, or if bears will exploit any dip past the lower threshold. Ripple's flagship token, XRP, is poised to hit the exchange-traded fund market this week after a recent filing with the SEC. The proposed ETF, set to launch as early as Thursday, would allow investors to gain exposure to XRP through a regulated vehicle, potentially easing liquidity constraints that have long plagued retail and institutional traders alike. Market chatter is already leaning bullish. Traders are speculating that an approved fund could lift demand and provide a cleaner entry point for new capital, while skeptics warn of lingering regulatory uncertainty that might dampen the rally. For listeners tracking crypto's evolving landscape, this development signals a pivotal moment. If cleared, the ETF could legitimize XRP further, reshape market dynamics, and set a precedent for other digital assets seeking regulated access. Alibaba's stock has moved again as ARK Invest, led by Cathie Wood, added another 157,731 shares to its portfolio. The purchase pushes ARK's stake in the Chinese e-commerce giant closer to a significant threshold, signaling that the firm sees renewed upside in China's tech scene and believes AI innovation will drive long-term growth for Alibaba. Market watchers interpret the move as bullish sentiment toward the company and the broader Chinese market, especially after recent volatility has sparked FOMO among investors looking for a rebound. ARK's action comes amid ongoing debates over regulatory scrutiny in China and the rapid expansion of AI capabilities across sectors. The firm's confidence may encourage other institutional players to re-evaluate their exposure to Chinese tech stocks. XRP's long-awaited spot exchange-traded fund is poised to hit the market this week, with regulatory filings and Nasdaq clearance indicating the first pure-play U.S. XRP ETF could start trading by Wednesday or Thursday. The filing confirms the final approval step, sparking a surge of FOMO among holders while also raising questions about liquidity and custodial risks that could temper enthusiasm. Market sentiment is largely bullish as traders anticipate a new avenue for institutional exposure to Ripple's native token, potentially tightening the supply-demand gap that has kept XRP's price volatile. For listeners, this development marks a significant regulatory milestone. A spot ETF would provide a more straightforward, compliant vehicle for investors, aligning XRP with other crypto assets that have already entered the ETF space and could influence broader market dynamics as adoption widens. Altcoin, LTC, is the focus of today's market update. Recent data shows the coin trading around $101, down 5% in the last 24 hours, and it is currently testing a resistance level near $110.60. Technical indicators paint a mixed picture. The relative commodity index has turned positive, and the awesome oscillator sits firmly in green, signaling short-term buying pressure. Yet the overall trend remains bearish until that resistance is breached. Analysts highlight a key retest of the horizontal $110.60 level, now acting as support. If LTC can hold above it, the next target could be $120, with a potential swing toward the $130–140 zone if momentum continues. Market sentiment skews cautiously bullish. Traders are watching for that breakout while remaining wary of a pullback to the $104 support area, which would trigger a slide toward $100. In context, November's average price is projected near $118, suggesting steady upside, but also reminding investors that LTC still faces volatility as it navigates these critical thresholds. Sonic Labs, a developer platform building on Ethereum Layer 2 solutions, has announced a strategic pivot toward a fundamentals-driven token model aimed at boosting long-term ecosystem resilience and attracting sustainable developer engagement. The company will shift its incentive structure to reward core contributors with native tokens rather than short-term grants, signaling confidence in the network's intrinsic value. Market observers view the move as bullish for Sonic Labs' credibility, reducing FOMO-driven hype while mitigating potential dump pressure from speculative token sales. By aligning rewards with tangible development milestones, Sonic Labs positions itself to appeal to both institutional and community stakeholders seeking stable growth. For listeners following Layer 2 scaling projects, this shift underscores a broader industry trend toward value-based incentives that could reshape developer dynamics across the crypto ecosystem. Canary Capital has secured Nasdaq's approval to list its spot XRP ETF, a development that could reshape the landscape for Ripple's digital asset following the landmark court ruling. The exchange authorization means the fund will trade on the same platform that hosts major equities and crypto products, giving investors a regulated, liquid vehicle to gain exposure to XRP without holding the token directly. Market sentiment is sharply bullish. Traders are already pricing in a potential price lift, as the ETF's launch could attract institutional capital and broaden retail participation. The move also signals growing confidence from regulators in spot-based ETFs for cryptocurrencies that have survived legal hurdles, positioning Ripple ahead of competitors still awaiting approval. For listeners tracking crypto's evolving regulatory environment, this Nasdaq nod represents a significant milestone that may accelerate XRP's mainstream adoption and set a precedent for future asset class listings. VCI Global has just secured a $100 million investment from Tether, with the stablecoin giant poised to become the company's largest shareholder via its stake in Ubit. The deal marks a significant capital injection for VCI, a crypto asset management firm that focuses on institutional exposure to digital assets and blockchain infrastructure. The influx of funds is likely to signal confidence from one of the industry's most liquid entities, potentially boosting market sentiment around VCI's growth strategy. Analysts note that Tether's involvement could provide a liquidity cushion and lend credibility to VCI's product suite, especially as the firm expands its token-curated index offerings. However, some traders caution that Tether's recent regulatory scrutiny might introduce a degree of volatility or FUD for investors watching the partnership unfold. For listeners, this move underscores how stablecoin providers are increasingly stepping into active ownership roles within crypto firms, blending liquidity provision with equity stakes. It also highlights the broader trend of institutional players seeking diversified exposure through strategic acquisitions rather than traditional token purchases. The market will likely monitor VCI's subsequent performance and any regulatory developments tied to Tether's expanded influence in the sector. Bitcoin's mining giant Marathon Digital, MARA, has sounded a warning about tightening profit margins as operating costs climb. The company's CEO highlighted that rising electricity and hardware expenses are squeezing earnings for miners, especially the smaller outfits that rely on cheaper energy contracts. In addition, He noted that many miners are pivoting into AI hosting services, which could shift how power is allocated across the network and further pressure traditional mining economics. Market chatter has turned bearish as investors weigh the impact of higher overheads on future returns. Some analysts fear a potential cascade of cost-cutting measures or asset sales. For listeners, this underscores that while Bitcoin's price may stay resilient in the short term, the underlying profitability landscape is evolving. Miners may need to diversify or consolidate to survive the new energy and compute dynamics shaping the sector. Lido Finance's governance layer has unveiled a new plan to trim its native LDO supply while boosting on-chain utility. The proposal calls for an automated liquidity buyback that will purchase LDO through Nest, pair it with WSD-ETH in a Uniswap VTWO-style pool, and deposit the resulting LP tokens into the DAO's Aragon agent. Buybacks are set to trigger only when ETH trades above $3.0 and the DAO's annual revenue exceeds $40 million, making the mechanism anti-cyclical. Stronger ETH performance and higher inflows lead to more LDO removal. If passed, the system could execute up to $14,350, zero purchases a year with less than 2% price impact per trade, targeting roughly $4 million of buybacks annually. By tightening supply and deepening liquidity, the move is likely to generate bullish sentiment among holders who see improved price stability and integration into DeFi protocols. For listeners, this signals Lido's ongoing effort to align token economics with its staking revenue model, potentially strengthening LDO's long-term value proposition as the broader crypto market watches ETH's trajectory. Solana has outpaced Bitcoin and Ethereum after a surge in spot ETF inflows that topped $68 million, marking a significant shift in institutional appetite for the high-throughput chain. The influx signals growing confidence among long-term holders, while traders have kept leverage levels restrained, avoiding a sudden spike in volatility. Market sentiment has tilted bullish as the liquidity boost suggests broader acceptance of Solana's technology and governance model, contrasting with the more muted flows into Bitcoin and Ethereum. For listeners, this development underscores that even amidst tightening risk controls, certain altcoins can still attract substantial capital, hinting at potential momentum for future price action within the sector. Lighter, a rapidly scaling Layer 2 decentralized trading platform, has just closed a $68 million funding round that values it at $15 billion. The capital, led by Founders Fund and Ribbit Capital with participation from Hawn Ventures and Robinhood, comes in the form of equity and token warrants, giving investors an early stake before the native coin launches. This injection will fund global expansion and accelerate the rollout of a spot trading engine slated for later this year. The deal signals a renewed institutional appetite for core DeFi infrastructure after a quiet funding period. With profitability already achieved, Lighter's growth trajectory is viewed as bullish. Investors see it as a pipe rather than a speculative coin, reducing FUD and boosting confidence in practical, revenue-driven projects. For listeners, this move underscores the sector's shift towards sustainable, regulatory-aligned platforms that can support mainstream trading and settlement, hinting at a broader DeFi comeback focused on infrastructure first. Sony and Stardill have launched the Stardill app, a super app built on Sonium's Layer 2 network. The platform rolls out account abstraction so users can create wallets without seed phrases, enjoy gasless transactions, and deploy mini apps directly inside the app, streamlining access to token launches, airdrops, and TGEs. Currently in closed beta, the public release is slated for later this year, positioning the app as the central hub for on-chain rewards within Sonium's ecosystem of 10 million weekly transacts and 90K daily active addresses. The move comes amid Japan's tightening regulatory framework for stable coins and tokenized equities, with the FSA approving a yen-backed stablecoin and partnering banks to pilot adoption. Stardill is also collaborating with SBI Holdings on a regulated 24/7 trading platform for tokenized stocks. These developments suggest bullish sentiment. The app could lower friction for mainstream Web3 users and dovetail with Japan's growing digital asset infrastructure, potentially boosting engagement across Sonium and beyond. Bitwise has officially added its Chainlink ETF to the DTCC's electronic registry under the ticker CLNK, confirming that institutional platforms are tightening their grip on DeFi assets. The move means the fund can now be processed through the same clearinghouse used by traditional equities, a step many market watchers see as a milestone toward broader acceptance of crypto-backed securities. In reaction, sentiment has tilted bullish. Traders note that DTCC listing removes a key operational hurdle and signals confidence from custodians and exchanges alike. For listeners watching the landscape shift, this development underscores how institutional infrastructure is catching up to on-chain innovation, potentially easing access for portfolio managers who have long hesitated due to settlement complexities. The listing could accelerate flow into Chainlink-linked products as more funds look to diversify with a regulated, exchange-listed vehicle that still delivers exposure to the leading Oracle protocol. Shiba Inu, the meme token that once rode a wave of FOMO to the top 100 list, has slipped past another zero today, trading around $0.09 after a near 5% dip. The slide fuels bearish sentiment as holders question whether the project can recover from 2 years of decline. In response, marketing lead Lucy Shib issued a statement reassuring investors that SHIB remains resilient and poised for a rebound, citing its continued presence on major exchanges and ongoing ecosystem development. Meanwhile, lead developer Shitoshi Kusama has stayed quiet since September, focusing on AI initiatives outside the token's core roadmap. For listeners, the key takeaway is that while the price pressure is tightening, the team maintains confidence in SHIB's long-term viability, even as market sentiment swings toward caution. Dogecoin has surged nearly 10% this week, hovering around $0.182 after breaking a descending trendline on its daily chart. The MACD flipped bullish with the line crossing above its signal, and the histogram is climbing, signaling stronger momentum across multiple timeframes. On the 4-hour chart, an inverse head and shoulders pattern has completed a breakout, while a cup and handle formation on the 12-hour chart points to a target near $0.211. Traders are keeping a close eye on the $0.18 support level that has held firm. Binance data shows long positions at roughly 78%. Market chatter remains bullish, with sentiment models echoing optimism and buyers defending the key resistance zone. Meanwhile, a Bitwise Doge Spot ETF is in its final 20-day countdown for automatic approval, which could add institutional weight if cleared. For listeners, the current narrative is one of sustained upward pressure and potential upside as technical signals align and new investment avenues loom on the horizon. Shiba Inu's latest headline comes from Coinbase's announcement of a regulated token sale platform that will open primary offerings to U.S. retail investors for the first time since 2018. The launch, set to debut with Monad from NAV 1722, includes an allocation algorithm favoring smaller buyers and penalties for quick flips, aiming to curb speculation and create a steadier market. Market reaction is mixed. Bullish sentiment around Shiba's Layer 2 milestone, 14 million blocks on Shibarium, and a recent 7% weekly gain, yet bearish cues persist with the token trading below its 200-day moving average and a fear and greed index of 29. For listeners, this development signals a potential shift toward more regulated pre-sales that could legitimize meme coin projects, while also highlighting the continued volatility that keeps traders wary. Ethereum Layer 2 DEX Lighter has closed a $68 million round that pushes its valuation to roughly $15 billion. The funding was led by Founders Fund and Ribbit Capital, with Hawn Ventures and Robinhood also participating. Lighter, founded in 2022 by former AI entrepreneur Vladimir Novakovsky, already offers perpetual contracts on a transparent, on-chain platform and is gearing up to launch spot trading soon. This capital injection signals bullish sentiment for the project, as it aims to scale infrastructure and broaden its product suite, potentially increasing liquidity and TVL among Altcoin networks. For listeners, the move underscores how Layer 2 solutions are still attracting significant venture interest, despite a broader market that has seen mixed performance. The added funds could help Lighter solidify its position against competitors like Hyperliquid while delivering faster, cheaper trades for active traders. Bitcoin has been rattled by a surprising break in its most reliable macro cue. The copper-to-gold ratio that usually signals a risk-on turn and precedes the asset's parabolic climb. The indicator, long regarded as a growth versus fear barometer, copper strength for expansion, gold for recession fears, failed to hit the expected turning point just as Bitcoin breached its all-time high at $104,486. Instead of producing a higher low after a brief higher high, the ratio plunged to a 15-year low, and the accompanying Fisher transform did not confirm the risk-on window that historically pushes BTC into a final rally. The fallout is clear. Without the macro-driven impulse, the market has stalled in a sideways drift, delaying the anticipated cycle top. Altcoins have also missed their usual rotation, as Bitcoin dominance remains anchored, but the negative correlation between BTC and the ratio suggests a lingering fear environment. Traders are seeing a muted sentiment, FUD outweighing FOMO, and caution is advised until the copper-gold gauge turns back up, which could signal a shift toward risk assets again. Bitcoin's spot demand has turned bullish after a month of negative pressure, according to on-chain analytics from CryptoQuant. Giulio Morno highlighted that the apparent demand metric, calculated by subtracting miner production from inventory changes, has flipped back into positive territory for the first time since early October. This uptick suggests fresh buying interest in the base layer. However, derivative markets remain subdued. Glassnode notes that Bitcoin futures open interest stayed low after a sharp October liquidation wave, indicating limited speculative buildup and a broader de-risking mood among investors. U.S. spot ETFs have also been draining capital, reinforcing the cautious stance. With Bitcoin's price hovering near $103,200, the market is watching whether this renewed spot demand can translate into sustained upward momentum or simply signal a temporary reprieve before further consolidation. Sway Network's native token, Sway, has broken out of a one-month downtrend and is now testing key support near $20 after a recent pullback that saw the coin dip below its long-term floor. The rally followed an 87% crash to $0.50 in early October, and despite a brief slide into a 7-month low, Sway has bounced back to a weekly high of $2.20 before pulling back, alongside most markets. Technical chatter is bullish. The TD sequential indicator issued a buy signal, and analysts point out that sustained buying could lift Sway toward $3 or even $4 if momentum holds. The move comes after Crypto.com announced regulated custody and liquidity support for Sway, giving institutional players a compliant entry point. Traders note that Sway has hovered between $20 and $40 since late 2024, with the lower boundary acting as a critical support zone. A firm hold could trigger a 50% rally to the next resistance. Market sentiment is cautiously optimistic, though past breakouts have been followed by volatility and potential retests of the downtrend line before any further upside. As of now, Sway trades around $2.7, down 38% on the daily chart. Bank of England Deputy Governor Sarah Breeden has thrown her weight behind the regulator's draft stablecoin framework, a move that steadies the sector after a wave of industry pushback. The proposal, which tightens reserve requirements and mandates real-time reporting for digital currency issuers, aims to curb systemic risk without stifling innovation. Market reaction is mixed. Some traders see it as a stabilizing step that could reduce volatility, while others fear regulatory overreach may dampen growth and spur capital flight toward less regulated jurisdictions. The backdrop remains the broader push from global central banks to bring stablecoins under clearer oversight, following high-profile incidents of liquidity crunches in the sector. Investors will be watching how the bank's stance influences forthcoming policy drafts across Europe and whether it nudges other regulators into action. XRP has pulled back after a brief rally that pushed it above $250. The token slipped from its recent high near $258, settling close to $240 and hovering around the 100-hour moving average. A short-term bearish trend line is forming with resistance at roughly $244 on the hourly chart. If XRP can break through the first key resistance near $250, it could test $255 and potentially move toward $262 or higher, but a failure to clear that zone may trigger a fresh decline. Initial downside support sits around $236. The 61.8% Fibonacci retracement of the swing from $224 to $258, and a lower level near $232 could push the price toward $225, with further support at $220 before potentially falling below $212. The hourly MACD is trending bearish, and the RSI sits under 50, reinforcing a cautious market mood that leans toward FUD rather than FOMO for XRP at this moment. Coinbase has abruptly abandoned its $2 billion bid for the UK-based stablecoin firm BVNK, a move that signals a pivot in its approach to digital fiat currencies. The withdrawal came after months of negotiation and regulatory scrutiny, leaving the two companies to walk away from what many market watchers had dubbed a potential game changer for the stablecoin sector. In the short term, the announcement has stoked bearish sentiment among investors who were hoping